What's going on YouTube? Welcome to Credit Plug Vlog. So on today's video, I wanted to just share some insight on how to go about obtaining access to financial resources, whether that's personal credit or business credit. And this is just coming from my perspective, someone who works with a lot of financial institutions, have connections with a lot of different banks, have over 7 figures in available personal and business credit. So I just wanted to share my insights, and hopefully this can help you go about your journey. Now, again, I don't have the highest credit score in the world. I don't have the most credit in the world, but I just wanted to share kind of, how I was able to go about obtaining the amount of credit that I was able to do and what information that you really need. Because like I said, I see a lot of false information, and really what it boils around is these perceived shortcuts to get funding. And I'm going to tell you right off the break, especially on the business side, there aren't shortcuts when it comes to getting funding, right? The easiest way to qualify for funding is to actually qualify. I feel like people put so much energy into trying to inflate their information or deceive the financial institution to get access to credit. Now, when you're approaching financial institutions, it should be an approach in terms of a partnership, right? You do something for them, they do something for you, right? Partnerships go both ways. It's not just one-sided. I feel like a lot of people approach the financial services, the banking system as, let me try to get one up over, or let me just try to get a quick finesse. And I'm always preaching relationship banking because that's what has enabled me to reach new heights. Now, over the past 2 years, I've made over 7 figures. This has enabled me to just kind of get a better understanding of what requirements are needed to qualify for certain types of loan products, what the banks are looking at, and how the banking relationship can really unlock a lot of financial resources. And so I just wanted to kind of share that. Now, I did a video over a year ago specifying the different components that will almost guarantee that you get approved for different credit accounts. And I've been able to have a lot of success with this recently because, again, like I said, having certain data points that the banks are looking for. And it's not that hard. I'll summarize it in the easiest way by having positive data points, by having, for one, a good credit history. So a track record of paying your bills on time, not causing losses to the banks, because that's what banks don't like. Now, when you have bad credit, basically what you're conveying, what you're screaming is that I'm going to fumble the bag. I don't value relationships, and I don't value, paying back my financial obligations. That's what bad credit is telling the financial institutions. And they don't want to deal with that because most banks are for profit. Most financial institutions are for profit. So what do they try to avoid? They try to avoid L's. I talk to lenders every single week, multiple times per week. And what they're combating on a daily basis are people trying to finesse the banks. They're playing defense, right? They're spending billions and billions of dollars on data, information, security in order to protect the assets and the resources of the financial institutions. So when it comes to a lot of these shortcuts, people thinking that, oh, I'm going to add some trade lines. And even though I have a shell of a business, I don't have customers, I don't have sales, I don't have transactions, I don't have tax returns, thinking that you're going to just go and finesse the bank, right? When I go and get access to lines of credit, I go into the financial institution for the most part, and I'll sit down with the banker. I'll explain my business to them, really build that rapport with them, that personal relationship, so they know exactly who you are, what your business needs are. And that's setting a precedent in terms of a relationship, because you really have to think, okay, for me to get what I want from the bank, how do I position myself to get that, right? And you always have to position it as a partnership. It's not a finesse, it's a partnership. So partnerships are mutually beneficial. So you want something from the bank, you want credit cards, loans, lines of credit, and what does the bank want from you? That's what you really have to think about it. And what can you give to the bank? Now, what the bank wants your business. So they want your deposits. They want your inflows of income streams, merchant services, there's insurance, and they want you to use their credit products because they're going to earn transaction fees as well as, interest, if you're carrying balances. So you really got to explore multiple relationships with the financial institutions. That's why a lot of financial institutions have relationship rewards. The more embedded you are with a financial institution, the more you're going to be able to get from that financial institution, because you're more invested in the relationship. When you have multiple accounts with them, maybe personal accounts, business accounts, insurance, merchant services, credit cards, loans, so the more deep the relationship is, the more you're going to be able to do. And so when people are approaching the bank, another thing I wanted to point out before I get to that point, the bank needs deposits, right? Because based off the fractional reserve system, that's how banks operate. The banks have to hold a certain amount of deposits in relation to the amount of loans that they can issue. So the fractional reserve rate, and I'm not 100% sure, but it was something around like 10%. It might be even lower than that now. But basically, let's say if the bank has $1 million in deposits, they can loan out 10 million. So they can loan your money out over 10 times over. So the way that you position yourself to benefit from your banking relationship is to have deposits with the bank, because what is that doing? That's enabling the bank to grow their lending capacity. So by you having, let's say, $1,000 in the bank, or 10,000, let's say just 1,000 for illustration purposes, you're enabling the bank to issue out $10,000 worth of loans. So you're helping the bank expand their reach more customers, and earn more interest and fees. So you really got to position yourself to be an asset to the bank. Now, when people are coming and approaching the bank, like, let me try to lie about my information, or use a CPN, or use trade lines to inflate my credit worthiness, that's not building a relationship, right? That's one-sided. And that's a lack of financial integrity when you're trying to deceive the financial institutions and you're only looking at it one-sided. And so when you position yourself that way, the bank is going to look at you like, okay, you're a risk, because what are you bringing to us except for risk, right? You're not bringing deposits, which is the main thing that they're looking for, having that deposit relationship, because you have some skin in the game. When you don't have skin in the game, you're just risk, and banks can see that from a mile away. If you have bad credit and you're not bringing deposits, those aren't the types of customers that the bank wants to deal with. So you really got to look at it as a partnership. When I go in the bank, they know who I am. The tellers know who I am. It's not like I'm trying to hide who I am, or, I'm coming with some type of false pretense just to extract resources from the bank and bring nothing in return. And so the relationship banking has really opened up a lot of opportunities for me. It's enabled me to have over 7 figures in available credit, so I can just go out here and do whatever it is that I want. Now, the last point I wanted to make is having financial integrity, right? Because again, your credit score is much more than just a numeric number. Your credit score is your reputation. So when you have a bad reputation, it's going to limit the amount of opportunities that are available to you. When you have a good reputation, you're going to have much more access. So when people have bad credit and, bad financial habits, don't value relationships, you're going to have less access for different opportunities, whether that's, financial or business relationships, social relationships. So having a good reputation is everything, because the people who don't have good financial reputations wind up poor. And I see a recurring thing where, people will just keep tarnishing their financial relationships, and then get to the point where you have no resources to lean on. The best thing you can do is have good credit, build a banking relationship as your financial situation starts to improve, because my philosophy is the more financial resources you have, the more money you can make, and your relationship is going to be able to grow. And this does take time. It's not a get rich quick scheme. Let me throw some trade lines, let me add a couple vendors and then try to get a loan. That's not the game right there. And anyone who's telling you otherwise doesn't really know the process, right? When I just got a $50,000 business line of credit, right? Because of my banking relationship, because of the excellent credit history, they see my deposits coming in. They see the different sources of deposits, right? So it's not just, oh, let me Zelle money back and forth between accounts. Listen, I do syndicated loans, right? So I'm actually looking at deals all the time. And if I can tell based off a visual inspection of your financial information or your bank statements that this isn't actual revenue, what do you think these algorithms can detect, right? Looking at a longer, history of data points. I just say all that to say, come correct, look at it as a partnership. Don't look at it as, let me just extract what I can and not bring anything in return. You really got to position yourself to be an asset of the bank, because it is a partnership. You give and you receive. It's not just, you receive. It's not just all about trade lines, and trade lines. Credit is a lagging indicator, right? Credit is backwards looking. So a lot of lenders are going to be asking for your bank statements. They're going to be asking about your accounting software, right? Because what you don't hear from a lot of these so-called business credit experts, how come a lot of them don't talk about having an accounting software, having a balance sheet, having an income statement, right? All those are important data points, especially when you're trying to get these high limit loans and lines of credit. They're going to be asking for more documentation, tax returns. And a lot of people don't also realize that when it comes to, let's say, for example, if you're a small business, when you run payroll, your payroll providers such as like ADP or even Gusto, they report that information to Experian Business. So the business credit reporting agencies know if you're running payroll or not, right? So real businesses run payroll, right? Fake businesses or people who try to skip over steps and not get set up properly, not doing things by the book, those little details are going to get, identified when you go through underwriting processes. And people don't understand all the other external data sources that banks have access to. Remember, these are trillion-dollar banks. So they're going to have much more access to information than you think they do. And so they can verify income. A lot of people think that, these stated income applications, it's just, you put a number in, but no, they can verify through a lot of these payroll providers. So even things like ADP, QuickBooks, Gusto, Paychecks, all of that information does make its way to different data vendors and business credit reporting agencies that the banks have access to. So I just wanted to put this out there just so that, you guys can have a better understanding of the right way to go about building banking relationships. Thinking this short-sighted, short-minded finesse, I know that's real popular right now, but that's not the right approach when it comes to trying to get access to financial resources. You just want to position yourself as a low-risk customer and look at it as a partnership. Don't go walk into the bank, trying to deceive. You want to approach it as a mutually beneficial relationship. So anyways, that's all I wanted to cover in today's video. Let me know your comments and questions down below. And until next time, take it easy and we'll talk to you soon. Peace.